so that you can be better prepared. So this webinar is going to empower you. And when you put your taxes together for next year, I promise you, you're going to be able to have a better conversation with your accountant. So when we talk about optimizing your taxes, what we mean is only paying for what you really owe so that you can keep more money in your pocket. So you are responsible for, as a business, you're going to be paying self-employment taxes. And as an individual, as you always have, you're going to be paying your federal income tax and state income tax, which you guys do have. And by the way, I'm in New Jersey, which is really cool to be able to talking to you. I have income tax as well, state income tax. So what do those business deductions do? They reduce your net earnings and therefore your taxable income, which is going to reduce the amount of taxes you're going to pay. And again, I'm going to tell you all about what net earnings are, et cetera. So when we make money, that is called our gross profit. We take from that gross profit business deductions. And I'll explain again what those business deductions are. But when we subtract out the business deductions, we get our net earnings. And that's the starting point of where all of our tax calculations start. So gross profit minus business deductions equals net earnings. And before I forget, after this presentation, we will be giving you a small business guide that'll cover a lot of this information, plus more. So what are those business deductions? Business expenses. Many of us have filled out this Schedule C form. The IRS describes the business expense as an expense that is necessary and ordinary, something that we need to run our businesses. So for our grant writer, I am sure that you are spending a lot of time typing away on your computer, and maybe you even have a subscription service to Grammarly, which is an online, like it helps your, to see if you have any grammatical errors. Well, that subscription to Grammarly is a business expense. It is necessary for the writing that our grant writer is doing. So there's a lot of different categories. We're going to go through a bunch of them. But if you were on the line about questioning whether something is a business expense, talk to your accountant about it. I met a woman in one of these workshops who her job was she took explorers, or her clients were people that were interested in seeing different forests throughout the country. And she was like buying books on different forests, and she was touring herself to forests. And she was like questioning, like, were those books deductions? And yes, her accountant deemed that they were, because she was doing her research. And the trips that she was taking to the forests were also something she could write out, because that was part of sort of her training on how she could better service her clients. So if you do have any questions about whether something's a business expense, talk to your accountant. So here are some common ones that are very typical for us as solo business owners. Hardware and software, our computers, any software that you're buying to use Adobe software, for instance, if you're using for graphics. I am very old school. I love my pens. I love my pads. I love sticky notes. I go to Staples. So any of the expenses I have at Staples are my office supplies. They are business expenses. Subscriptions and dues. If you belong to, so for my our electrical business, you might belong to the Electrical Contractors Association and pay a due. Well, that due is a business expense. For my coach, if you subscribe to a coach's newsletter, that subscription for you is business expense. Marketing expenses. We need to market our businesses in order to bring in new clients. So everything from if you use an email service provider, your Google AdWords, your website charges. If you had a billboard that was in front of your location, that billboard is advertising, that's a marketing expense. That's a business expense. Utilities, I will get to that when I talk about home office. Wait, if you have client meetings, so if you're going to see a client, to pitch business, to service their accounts, the food, the transportation, business expense. If this workshop had a fee to it, that fee would be a business expense. So any business training, I work with a coach. So that is something I can write off as a business expense under the category of training and development. If you had a business trip to go on, so if I was presenting this live to you, I would have been able to write off my trip as a business expense. Are there any quick questions on business expenses? And then I'm going to get into car mileage and home office because there's some further detail on those. So Josh, let me know if there's anything in the questions.
Don't see any questions yet.
Okay, great. And I'm sorry if I'm hearing myself in my ear, so I apologize. Okay, so home office. Many of us are working from home. The picture behind me is my dream home. That's a Zoom screen, but I am working from home. And I am working in a space that is exclusive for my business. So the IRS says, then you are able to write off that space based on square footage as part of a business expense. So they cap it at 300 square feet. But the place that you're doing business, and again, this is when you're running your business from your home, not if you're a remote worker for another company, but you can write off up to 300 square foot. And if you are working at your dining room table, doesn't count. But let's say you have, like I talk to people that live in small apartments, and they have taken 50 square foot of their apartment that happens to be in their dining room, but that space is allocated for business. So they're able to write off that 50 square feet. So that's your home office deduction. You can also take the same square footage and apply that to your utilities. So if your utility bill is $200 and you're writing off 50 square feet of office expense, you can take that same percentage of your utility bill and say 50, you calculate what your square feet is and take that portion for your utility. Of course, if you're working out, if you have a retail space, all of that utility is part of your business expenses. So we're talking your Wi-Fi, your electricity, your telephone, if you have a landline. And of course, your cell phone is considered is your hardware, software expense. And your car mileage. So basically, and I will preface this by saying, you have to choose one or the other. Your standard rate method or your actual expense method, and talk to your accountant about this because he will let you know, or she will let you know which works best for you. So it's either taking a standard rate, which is taking all the miles that you use for business. And in 2021, it was 56 cents per mile. I think the updated for 2022 is 58 cents a mile. Or the actual expense method, which is a percentage of all your vehicle expenses. but you need to discuss with your accountant which ones. It is critical that you keep track of your mileage. So there are apps for doing that. You can go old school and write it in a journal, a notebook in your car, in your calendar, etc. But it is important that you have those expenses logged. So at the end of the year, you'll be able to calculate. Any questions, Josh? Any new questions come in?
Not that I have seen so far.
Okay, great. So business deductions, all of those business deductions that we just talked about are going to save you money. Remember, your gross profit minus those deductions equals your net earnings. And net earnings, that's where the tax calculations start from. So in this case, we're looking at our self-employment taxes, and I'm going to get into that in a second. But in scenario A, with $10,000 in business deductions, we had net earnings of $65,000, and we owed $9,100 in self-employment tax. In scenario B, with $15,000, because we made sure that we calculated our mileage and we made sure that we calculated our utilities, etc. And we actually, our net earnings were reduced to $60,000, but we owed less in self-employment tax. So we were able to keep $700 in our pocket.
I do have one question that just popped in.
Yes, thank you.
What about commuting? Don't we have to make our first trip of the day a commute? Then we can make the rest of the trips business.
Correct. And I'm, again, not an accountant, but your commuting to business is not considered the business expense. It's going to see a client, etc. Okay, so here are just some tips on how to track. You want to track your expenses constantly. You want to save your receipts. You should definitely scan them. And by the way, you can scan them into the Lili app. But if you don't use Lili, scan them into your photos and then email them to yourself, because the ink fades. A lot of times, like when you use Square for payments, they email you the receipt. If you receive anything by email, create a folder, and then you just have, it'll go right into, so I have like all my Staples receipts go right into a Staples folder. So this is the Lili app, and I unfortunately can't give the demo because my technology is not working right now. But in the Lili app, when you get a debit card, and when you use that debit card, you are able to, every expense, you can say, wow, this is like a dating app, or so they tell me. I've been married a long time. But you can swipe left if it's a life expense, swipe to the right if it's a work expense. And then at the end of the month, everything is neatly categorized for you so that you can see what your business expenses were versus your life expenses, etc. And your accountant's going to love you.
I'm going to chime in here real quick. Back to that first question, just a little clarification. They office at home. Usually the first trip is typically to the post office for the business. Then they go to the client. Would the post office miles, are they considered commute?
No, they're considered a business expense. Talk to your accountant to double check, but I'm 99.9% sure, which means I might be wrong, but no. Any other questions?
I think we're good. So
all right. Okay, thank you, Jeff. So we're going to jump into self-employment taxes again. So we have our self-employment, federal, and state. So self-employment taxes are our contributions to Social Security and Medicare. And it's interesting because when we're full-time employees, this is kind of like, I guess, a benefit we get as a full-time employee. We're only paying 50% and our employer's paying 50%. But when we're doing our own businesses, we're responsible for 100% of that obligation. So a self-employment tax is 15.3% on 92.35% of your net earnings. And it's a complicated reason why it's 92% versus 100%. But the bottom line is, as we move through this process, you will learn that you can actually write off half of your self-employment as one of your deductions. And it's really important to contribute, obviously, to Medicare and Social Security. My 17-year-old doesn't understand why she had to pay that money, but for some of us, we do understand why we pay that. So let's recap a little bit. We have our gross profit. We are subtracting our business deductions. Now we have our net earnings. We had a self-employment tax based on that of $8,400. So that's our self-employment tax. Now we got to move on to the federal income tax. And Albert Einstein actually said this, that the most complicated thing in the world to understand is the income tax. So we don't pay income tax on every cent we make as a small business owner. We first need to calculate our taxable income, and our taxable income is not the same as our net earnings because we have more deductions. We have above the line deductions and below the line deductions. So we go to the top. The best way to learn is to do this in like 101 fashion. We have our gross income. We're subtracting our business expenses, and now we're starting with that $60,000 in net earnings. So now we have what you call the above the line deductions. And this is contributions to our retirement accounts. It's our student loan interests. It's health insurance premiums for individual plans. And guess what? There's that self-employment tax. We can deduct half of what we paid to self-employment. Those are our above the line deductions. And once they are deducted from our net earnings, we have what we call our adjusted gross income, the AGI. So now we take from the AGI more deductions, and these are called your below the line deduction. And these can be itemized, or you can keep it standard. This is when you should talk to your accountant to determine what's best for you. But the government allows us a standard deduction. It changes every year. But in 2021, a standard deduction for a single filer was $12,550. So if you ended up where your itemized expenses were less than $12,550, you would do the standard deduction. In this case, you can choose which is best. So itemized deductions include charity donations, state and local taxes, your mortgage interest, and any unreimbursed medical expenses. So now we have our AGI, adjusted gross income, take away that below the line deductions, and we have our taxable income. So guess what? We made $75,000, but we're only responsible for paying taxes on $36,712. So we go in, whoops, there we go. So it's all about the brackets. So we all have particular ways that we file. And in America, it's a progressive system. So we are not paying the total tax percentage rate on the 36,712. It's broken down by each bracket, right? So which numerically the portion of the dollar. So in this case, the 36,000 broke down that $26,762 fell in that one bracket that was going to be taxed at 12%. And then the balance would be taxed at 10%. So our total income tax is $4,200. I'll just let you soak that in for a second. So we owe $4,200 in federal income. And then taxes for state taxes, every state tax is different. Many use the progressive system. Depending on, your state, obviously your percentages are different. So in the handbook that I'm going to send you, you can learn more about your state taxes, but it's very similar to your federal income tax. So here's a quick recap, and this was based on a business owner in Michigan. So the gross income was 75,000, 15,000 in deductions, 60,000 in net earnings. Boom, we know that we owed 8,400 in self-employment. We had our above the line deductions and below the line deductions that we took from our net earnings. Our taxable income was 36,712. We owe the federal income tax of 4,200 and our state income tax, if we lived in Michigan, of $1,600. So we had a total tax bill of $14,335, which was 19% of the gross income. So again, just to give you just the different scenarios, with the $10,000 in business deductions versus the $15,000, there's quite a difference in what we owe. So in scenario A, with less business deductions, we owed more in taxes, about 21% of our gross profit. And in scenario B, with $5,000 more in business deductions, we owed less in taxes. So we owed 19% of our gross profit, which was a difference of $1,400. So even if you make $75,000 this year, you really only have about $60,000 to spend personally. You want to make sure that you set aside money to cover 20 to 20% of your income. And I do have to update this slide. It's not just freelance, it's your solo business, your small business income. And what's neat, in the Lili app, it actually allows you to set aside money that comes in. You can say, for every $100 that comes in, I want to set aside $25. So it's really easy to set that up. Now we do have to pay quarterly taxes. So as solo business owners, we have to pay a quarterly estimate tax. And I would definitely sit with your accountant in kind of figuring out what you're going to owe, especially as you're just beginning. Remember, when we are a W-2 employee, we're actually paying our we pay them weekly in the form of the paycheck withholdings. But as business owners, we pay estimated 4 times a year. And we owe our quarterly estimated taxes, by the way, in 2 days if you haven't paid. But don't stress. You want to work with your accountant to set up your payments. There is something called safe harbor. So if you estimate and you underestimate, there's some rules in place that you won't get fined. It's basically 90%. So if you've made 90% of the taxes due for the current year, or if you are paid 100% of last year's taxes, you won't get fined. And if you do get fined, honestly, I mean, it may be a couple $100, it's still money, obviously, but I don't want you to stress about it. Work with your accountants. And then again, this is when the estimated taxes are due. So we have our third payment. So this was based on income received from June 1st to August 31st. This is actually due on Thursday, and you can pay online if you haven't already paid. So I would talk to your accountant. And again, I don't want you to stress. So again, with Lili, you can, in the app, you can save for your taxes and put them aside. So as money comes in, you can automatically set it up that money is completely put aside. And if you need it, it's all yours to take it. I met a freelancer. It was the end of the year, she told me, and she started to freak out because she had to pay taxes. And then she remembered she had them put aside in the Lili app, and she had all the money to pay. So it was certainly a relief. So that is it. Keeping it very simple. Like taxes and finances are like a really big stress of a business owner, of a small business owner. I really understand. I live it every day with you. I hope this broke it down in an easy way. And if you have any questions, we can take a few. If not, that's fine too. Anything for me, Josh?
I'm not seeing anything coming through on chat. So I will go ahead and I just want to say thank you, Wendi, for speaking with us today. Here, let me get my video back on so y'all can see my pretty face. Hopefully she was able to help some of you out with your tax questions. Also want to thank Nebraska Enterprise Fund for helping with this webinar today. If you still have any other questions, feel free to reach out to me or Sue. We can schedule some time one-on-one to talk about anything specific. Just a quick reminder, this webinar will be posted in our workshop archive on our website at iowawestern.sbdc.com under our webinar tab or workshop tab. Our next class in our small business essentials is creating content, and that's scheduled for October 11th from 1 to 3 here at Iowa Western. So if anybody's interested in that, just go on our website and reserve a spot. And again, thank you, Wendi, for speaking with us today. And everyone.
Josh, and everybody should get a copy of the
Yes.
Small Business Guide.
Everybody will get a copy of the Small Business Guide, yes. And we'll have that also on our website underneath the archive connected with this webinar. Okay?
And I may have a brand new version, so I should have a new version by the end of today if you want to wait. So it's
Okay.
the fresh updated.
It's going to take a little bit for the recording to be available. Usually it takes about a day before I can actually get it posted. So,
all right, everybody, pay your quarterly estimated taxes. Have a good day and stay well.
have a good day, everyone.